Do you prefer that he holds the microphone or he does?
Good morning, everyone. We want to first thank you for being part of this and coming here as we air out our press statements on the tax amendment bills that were tabled before Parliament. So it will read as this: with the civil society organizations under the auspice of the Tax Justice Alliance Uganda and representatives of the private sector are gathered here today to present to you our analysis of the proposed tax amendment bills and also the income tax bill, the excise duty tax amendment bills, the value-added tax amendment bill, and stamp duty tax amendment bill. The amendments have been tabled in consideration of the comprehensive midterm domestic revenue mobilization strategy and government efforts towards strengthening tax administration, enhancing tax compliance, closing the tax loopholes within the revenue cycle, and widening the tax base, amongst other issues. As the Tax Justice Alliance, we recognize that the efforts of government towards aligning tax proposals with the third National Development Plan, Vision 2024, and the Domestic Revenue Mobilization Strategy that runs from 2019 to 2020 to 2023-2024. We commend government for the deliberate efforts in engaging and consulting with various stakeholders, including the Tax Justice Alliance, the private sector, and the different stakeholders that are engaged in the formulation of the bills. We further recognize that taxation is the primary and the most sustainable source of revenue collection to finance the different government development programs. And according to the recently released budget estimates for the next financial year, that is 2024-2025, Uganda's resource level stands at 58 trillion. This sets the domestic revenue targets to 31 trillion, and that includes tax and non-tax revenue. This is likely to exert additional pressure to the government to double its efforts to meet the set targets, and on the other hand, it's an opportunity for them to enact tax policies that are progressive in nature and improve the efficiency in tax administration. However, on the other hand, we note that it could also compel governments to rely more on indirect taxes and other regressive tax measures which may disproportionately affect the poor and the most vulnerable people. So we reaffirm our call to government to enact tax policies that promote progressivity, equity, fairness, inclusivity, and even the distribution of the tax burden across the tax value chain. So amongst all the tax proposals that were tabled before Parliament, we recognize the provisions, amongst others, that aim to clarify the interpretation of the Uganda's tax code, easing the cost of doing business, easing tax administration, and bringing groups that were not originally taxed into the taxable brackets. These include, amongst others, these are not limited to only these that we're going to state, but we are citing the most important ones: widening the scope of retirement funds to include the Provident Fund. This, we know that this particularly applies to employees, so in cases where an employee has been terminated, it gives them some sort of social security or social protection to cover them throughout the entire period. Repealing the concept of the branch to widen it to permanent establishment, and as well introducing the mandatory requirements to submit the transfer pricing documentations. These are geared towards domesticating the international best practices into our domestic tax law, increasing the threshold of tax refunds from 5 million under the value added tax regime to 10 million. We welcome that because this is going to reduce the administrative costs on the part of URA and unnecessary business costs that arise from audit requirements to qualify for the tax refunds. We welcome the excise duty rates on locally manufactured goods, including fruit juice and vegetable juice, which is aimed to promote local content and reduce the cost of production for domestic manufacturers. Amongst our concerns, we note the following proposals, which and we also make following the observations and recommendations amongst these. 1. The taxation of non-business assets under the proposed Section 5. This proposal intends to introduce a 5% tax charge on proceeds of disposal of non-business assets. We know that this is a form of wealth tax that is supposed to be brought within the tax regime. However, this may, because of the drafting, the way it was drafted, cause ambiguity in its implementation and interpretation of the tax laws, as we explained below. The absence of the definition of the principal place of residence will subject this particular proposal under the principal purpose test, which will create ambiguity, and the current proposal does not necessarily explain it for the public to know. The selective nature of the application of the proposed amendments undermines the principle of horizontal equity, as land outside Kampala, land out of the prescribed places that include cities, municipalities, remains exempted from the said capital gains regime. This could deter and have negative impact on land acquisition, thus therefore constraining production and investment by individuals, imposing additional burdens on citizens, especially the marginalized groups, the women and the youth. The proposed treatment of the rental property income, rental property as non-business assets undermines the current tax regime, where rental property generates rental income that is subject to tax under the Section 5 of the current Income Tax Act. The proposed 15-day timeline is unrealistic and neglects the market dynamics, which includes installment payments in land acquisition, creating additional tax burdens for a taxpayer. We recommend that this should be rejected because it could discourage investment in land and also add additional costs affecting other sectors that could be affected in terms of investment and production. The extension of exemptions to the private equity and venture capitals under Section 21 that gives exemptions to under the tax law, and also the stamp duty. We understand that this is supposed to facilitate ease to access to credits for startups and high risk like ventures. However, in absence of regulations under the Capital Market Authority Act that is supposed to apply to these particular ventures, as this particular proposal looks at ventures that are registered under the Capital Markets Authority Act. So in absence of those, you know that this is going to cause just ambiguity of the clause and also redundancy of this, which will also facilitate revenue leakages. So this should be rejected pending enactment of the regulations to give assurance that this will benefit the intended people. The introduction of exemptions on income earned from disposal of government securities on secondary markets. This is geared towards easing trade in government securities on the secondary markets, encouraging investors to purchase the said security, the government securities. However, this is likely to increase the appetite for domestic borrowing, government domestic borrowing. So we call upon governments to refrain from it, because also this has the potential of diverting capital that would have been invested in productive sectors to just the government securities. Secondly, this will be a very huge revenue loss, because the interest that is earned on that income will not be taxed under for the secondary market investors. So we pray that this amendment should be withdrawn. The need for exemption of our proposed, the exemption for specialized investments in specialized hospitals. This is meant to foster investment in the domestic health sector so that they can reduce the out-of-pocket expenditure attributed to the search of healthcare from abroad. However, the incentive may not achieve its objective. The reasons below are: for the tax purposes, the definition of specialized hospitals is not defined, so that will create already ambiguities. The potential for discrimination in treatment for local investors is likely to happen, because the threshold of investment is too high. The requirement is 300,000 United States dollars. So that means it's going to discriminate certain categories that are operating specialized hospitals but do not have that capital requirements. So thirdly, this is going to privatize the health sector more, which may not necessarily achieve the objective of affordability for the ordinary citizen. So we pray that this is revised so that they can cater for all of this. Lastly, amongst the ones that we have concerns, the increment of the specific tax on essential commodities like kerosene, fuel, and mineral water. Whereas the best practice of excise duty is supposed to be applied as a way of discouraging consumption of harmful products and also charging luxury consumption. However, utilizing this as a regime of generating revenue may have negative impacts on the negative tax burdens on a final consumer. So, for instance, we look at the increment of fuel at 100 shilling. This may cause inflationary pressures on other commodities, including also a rise in the cost of production. Particularly the sectors that we say that may be affected is the transport for public services. That means it may be increased. The cost of production, which may also end up impacting the prices of goods. The one for mineral water could discourage the alternatives that have been created to encourage consumption of clean and standardized drinking water. Amongst these, we also have alternative tax proposals, which I'll speak to briefly. Government needs to enact tax policies that are going to facilitate the curbing of illicit financial flows. This will enable also government to return some money that previously has been leaking out. We pray that government expedites the process of formalizing of artisanal miners, because a lot of revenue leakages are happening there, despite of the fact that the Mining and Minerals Act for 2022 provides for the registration and formalization of the artisanal miners. It has been a year before these have been brought into book so that they can also contribute their fair share of taxation. There's a need to manage the tax exemptions and incentives, that is, expedite the implementation of the tax expenditure governance framework and the tax expenditure rationalization plan, and as well also put it in the public domain for public scrutiny. This will enable government to streamline the investments and the exemptions and the incentives that are given to the different investors, and as well enable it to put into action the recommendations of the Auditor General. There's a need also to review and revisit the Bujagari tax waiver. We note that this is, whereas the extension was given for 1 year, pending for the ad hoc committee to expedite on its work to produce the cost-benefit analysis. This is still pending, so we call upon the ad hoc committee to fast-track the process so that we, the Ugandans, can get to know exactly what is happening and to inform the tax policy that is going to change the landscape. The need for URA to enhance the tax education. URA has taken a lot of time and financial efforts to invest in the business community to help them understand the value of taxation. So we pray that the citizens are given more information about the tax system, their rates, the obligations, and how they can influence the tax development to build trust and also raise tax morale, ultimately increasing the voluntary compliance. The need to do an impact assessment is crucial, because annually we notice that the tax proposals are introduced. However, a lot of time is not given in terms of how the tax impact is going to be on ordinary citizens and the business community. So we pray that this is taken into action so that government can engage the effectiveness of these tax systems, and as well creates tax certainty and stability by also giving longer periods that require the business community and the citizens to adjust to the proposals that have been introduced. The need to adopt a progressive tax regime is important, as this is very critical in promoting tax equity. That means that the government needs to stop the reliance on the small formal tax base that is contributing the highest portion of the tax burden, and also increase the tax burden across the other entities that are not necessarily paying their fair share of taxation. The management of the revenue cycle, that includes the mobilization, allocation, and utilization, needs to be managed effectively. That includes the government needs to generate a lot of more income and put them in productive areas, including agriculture, trade, tourism, so that this can generate economic activity that will generate the income that will be taxable. Ensuring general responsiveness of the tax system. We note that this is very crucial in terms of the tax policy, as this is supposed to streamline how the different tax policies affect the different genders. The current tax regime is tax neutral, but it neglects the fact that women and men are affected differently by the tax proposals. Lastly, we are going to be looking at the increasing domestic payments. This needs to be checked, because we noticed that the domestic tax debt portfolio has increased from 15 trillion, that is in 2019 to 2019, to 44 trillion currently, if we have to base on the statistics of 2020 to 2023. So this, we note that it has increased by 193%. So we are calling upon government to take efforts to boost the economic recovery during COVID-19 and the spillovers of this effect, especially around the geopolitical tensions and the various external factors. So government needs to take deliberate actions to reduce on the domestic borrowing so that the interest payment as well can also reduce. In conclusion, with the civil society, under the Tax Justice Alliance, we call upon government and other stakeholders to put into consideration observations and recommendations to ensure that the improved tax regime, gender responsive and equitable, for a gender responsive, equitable and national development that encompasses all stakeholders. Therefore, we call upon government to ensure efficient utilization of resources to meet citizens' needs, service delivery, especially amongst the marginalized groups. Together, we call for a fair, progressive, and accountable tax system in Uganda for God and my country. Thank you. Now that we've read the press statement, I'll call upon the different members of the panel to also give the alternatives and their thoughts about the press statement as it has been read.
Yeah, good morning all. I want to speak to the proposed increment on some of the key commodities like fuel and kerosene and water. If Ugandans, you can all remember, before the conclusion of 2023, the Minister of Energy made some proposals in Cabinet and in Parliament, which led into the introduction of the Petroleum Supply Amendment Bill, and later which was signed by the President in December, the Petroleum Supply Amendment Act of 2023. All this effort was to ensure that prices in the pump for fuel reduces for Ugandans. For many years now, you know that Ugandans have been overpaying for fuel, and we commend the Cabinet and the Minister of Energy for coming up with that idea, which of course now has given exclusive rights to Uganda National Oil Company, UNOC, to export as a single exporter for oil in the country. So I want to think that the Ministry of Finance, Planning and Economic Development should have actually worked in sync with what Cabinet is proposing. A proposal of tax of 100 shillings for fuel actually sort of in a way contradicts the move by Cabinet and the Minister of Energy to reduce fuel for Ugandans. So as Uganda Tax Justice Alliance, we want to say and recommend that actually the Ministry of Finance, Planning and Economic Development, instead of introducing a new tax, they should actually even reduce from the current. The second aspect that I would want to address myself to is the issue of registration of artisanal miners. Ladies and gentlemen, you know that Uganda is really endowed with minerals, a number of minerals, and we know the potential that these minerals can have in our economy to develop our country. So we think that the Mining and Minerals Act of 2022, which provides for the registration of artisanal miners, is in place. But 1 year later, we still see that the registration of artisanal miners has been very slow. And we want to advise that government should expedite the registration of artisanal miners and address the challenges that are leading to the delay of formalization of the artisanal miners. We need to benchmark what other countries are doing. For example, having a one-stop center in case an artisanal miner is interested in formalization, and also reducing on some of the demands that artisanal miners find it is too much on their part, and for now they prefer to remain in informality. Thank you so much.
Thank you so much, the Alliance and then the press for coming before this stage. I would like to re-echo the issue of management of tax exemption and incentives. We've noticed that tax exemptions have not lived up to its intended purpose. And also, as the Alliance, we realize that there has not been any recent study that shows that tax exemptions and incentives can actually yield better results. We've seen this with the Auditor General's report, where the Auditor General has come out and said that among the 36 beneficiaries of tax exemption, about 22, which is almost more than half of them, are operating below 50%. So we've seen that there are evidence that shows that tax exemptions actually doesn't lead to what? Doesn't lead to a beneficial fact. We've seen issues with the IFRIS, and I've been seeing it a lot in the media of recent, but also the traders going up in arms and trying to fight this system. IFRIS is not actually a tax. It's just a measure of collecting the tax. But why are the traders and also the business community fighting back? We've noticed that URA and then the government itself has not done enough in terms of citizens and then taxpayers' education and awareness. This is something that instead of again introducing some of the new tax and with what we have challenged, let us focus more on educating the citizens, the taxpayers, so that when we introduce and also this tax, I know if the parliament approves it and they agrees with it, it will come in the next financial year. But how ready are the taxpayers to accept these taxes if they are still fighting the IFRIS, which is not a new thing? So it's something that taxpayer education needs to be put in the forefront. We have issues related to the management of the revenue cycle. We've seen money being invested in unproductive sectors and have not yielded. If you look at the Auditor General's report, it has given a lot of projects which have performed under capacity. So we are calling on the government to put money in productive sectors, to put money where we can generate more. I know we need the taxes, but if we cannot get the taxes, can we utilize the little money we have into productive and efficient sectors? So we are calling for efficiency in government systems. I'm happy that government have started introducing systems and to try and manage even the revenue collection. We have the IFRIS, we have so many management systems, but the change management system has become a problem. That it is hard for even the government themselves to transition into the new systems and try to start operating effectively. We have seen this change management system with I would give again the same example of IFRIS. This is a new system, but people are rejecting it because we've not handled that component of how are people going to change from this manual system of management. We've also seen this in government where we've seen some of the civil servants are still in the old system, and yet government already has a new public service new system. So these are the things that government needs to look as far as we are handling these issues of taxation. The issue of interest payment, I think my colleague from Uganda Debt Network will come in, but I want to bring in the issues of supplementary. Now, even this financial year is ending, but last week government has tabled a new supplementary budget, which is about 1.1 trillion. This is the last quarter. We are remaining with it roughly 1 month to end the financial year, but government has come in to give another supplementary. This is way beyond the thresholds that the Public Finance Management Act does allow, because last year, if you remember, government tabled about 3.5 trillion in supplementary, and all of it passed. So now we are calling on the government to try and reduce from calling a supplementary. Even our preliminary analysis shows that some of the supplementary they're asking for doesn't qualify. They're asking for recurring expenditure that should be forecast, that can be seen, it can be avoided. So we are calling government that why table a supplementary at the end of the financial year when you could actually wait and put this thing in the new budget. Thank you.
Thank you very much to my colleagues.
Your names. Your names. Your names. You mentioned.
Well, thank you. My name is Alois Steven. I'm a member of the Tax Justice Alliance and I work for the Civil Society Budget Advocacy Group. Thank you.
My name is Oscar Mark Otile, and I'm a member of the Tax Justice Alliance, and I work for Accord.
Thank you. I am Faith Lomonia, and I am a member of the Tax Justice Alliance, and I work for Akina Mama Africa. And I would just like to add my voice to my former colleagues who have just spoken and speak about the issue of the progressive tax system. So for a long time we've been demanding that the government puts in place a progressive tax system. The current system as it is regressive because it focuses or targets individuals who spend a significant amount of their money on consumption. So the ways in which our tax system is structured is such that whether it's VAT or excise duty, a lot of the taxes that have been put in place target us as consumers. And so there is need for more effort to target individuals who are able to who don't necessarily spend a significant amount of their income on consumption, and to tie this up with the issue of gender responsiveness, because a lot of the times when we talk about the need for a progressive tax system, we're also talking about the need for a system that is gender responsive, because a significant amount of money is also spent on consumptive taxes to be able to meet care needs. When you, for instance, think about the amount of money or the proportion of money that a lot of us as working class people or a lot of poor people or and a significant number of those being women, you find that a lot of the money that they are earning every other day or every other month has to be spent on care expenses. For instance, issues to do with food, issues to do with fuel, issues to do with electricity. And so even when you think about, for instance, the soap that you are buying, the oil, all these things are necessary to be able to run a home. And because the burden of running a home often falls on women and on poor people, it's important that we are cognizant of that, and that the tax system every other time it's amended, that it is amended to ensure that we are reducing on the amount of money that people are spending on the amount of money that people are spending in terms of tax when they attempt to buy consumer goods and services. The other thing I wanted to talk about is the issue of tax certainty and stability. If you are an entrepreneur, particularly a micro and small entrepreneur, you know that this particular issue affects us differently, because if you're not able to plan ahead and know that at a point in time T, this is the amount of tax that I'm supposed to pay as part of maybe my business income, or when you have imported certain goods and services, then it becomes difficult to plan for your business. And I'll give an example. When you import, if you're a small importer and you import commodities, for example, through the airport, when you get to the airport, it's difficult to know prior how much money you're supposed to pay in terms of tax, because the URA every month releases a specific exchange rate to the officials, the customs officials. And this particular rate is not even a rate that is in line with the market rate. We know that we live in a liberalized capital accounts economy, and they have allowed for exchange rate to be determined by market forces of demand and supply. But when it comes to the exchange rate that URA uses, this is a rate that is determined by the Revenue Authority. So it's impossible for you as an importer to determine the amount that you'll actually pay, because when they are calculating, for instance, how much your commodities were charged, say, so for instance, if you bought them in US dollars and they are supposed to be transferred into Uganda shillings, you're unable to determine how much that will be. And so the issue of tax certainty and stability is also one that the government needs to look into. But also, like was already highlighted, the amount, how long it takes for a new tax law to be implemented is also important. In certain countries, they allow for 6 months or a year, that if an amendment is done this year, it will not be effected this year, it will be effected in the next financial year, or at least 2 years later, to allow for people to prepare for it. As I conclude, I wanted to also speak about the issue of tax utilization. I mean, we live in a country where, for example, the out-of-pocket expense on health is very high. It's more than 35%. So for us to be able to access health care, you're supposed to ensure that you have money in your pocket to be able to pay for health. And if you're privileged and have insurance, it's different. But a lot of us as taxpayers are constantly having to pay an additional money when we go to access health. And so I think it's important for government to be also cognizant about the utilization of how this tax is being utilized. I can't belabor the point around how our roads look like and how that directly affects whether it is health or education or trade. And so I think for me, it's just to re-emphasize the point that yes, it's okay to collect, but it's also important to utilize it in a way that benefits the citizens. Thank you.
My name is Christine Durinchiro, and I work for Uganda Debt Network and a member of the Tax Justice Alliance. And today, from the press conference, I will speak to the tax exemptions on the income from government securities on the secondary market. And while this would ideally be a welcome move, because on the secondary market, that is where we see more players and a bigger, private sector, individuals, and generally any citizen coming in to invest. And so we would think that it is being inclusive. If the interest is not there, then it would encourage ordinary citizens to come in and lend to government, and this would also be good for government, specifically for the longer term securities, like the treasury bonds, which are 10 years plus. And so while we see this as a good move for government to access credit and probably throw their net wider in terms of revenue mobilization, our main worry is around one, the awareness raising, because right now there are very few, especially individuals, who are aware about this kind of investment. I will share with you an example. I was somewhere up country and I informed or shared this kind of investment. By the way, I'm an investor in treasury bonds, and so I do know the benefits. And one of the things that government has tried to encourage investment in bonds has also been cutting the interest rate. As you will be aware, in 2019, government reduced the interest rate on treasury bond incomes from 20% to 10%, and so that would be a welcome move. I was up country and shared with a friend, but you have to go to your commercial bank and then get this information. You cannot, as an individual, go to the market, to the securities exchange market. And so when she went to her branch of the commercial bank, who is a primary dealer, the staff told her they don't know about treasury bills and bonds. They did not know, or they did not have this information. So what am I saying? If the interest is reduced, the main beneficiary are those who are in the higher income bracket, those who are earning and those who are aware about this investment. And so this would ideally not be very beneficial to the ordinary citizen, to the private sector person who would want to invest. And so would call upon government first and foremost to do massive awareness raising for citizens to embrace this and invest. But then again, I come to the point on interest payments, because the trend has been that government, over time, we see that government revenues are usually spent on servicing the country's debt. And that is where our concern comes in, because as we stand, we see that first and foremost, the planning is, uncertain. Government has so far prepared, is it 3 and still counting budgets for the financial year 2024-25. The Ministry of Finance first shared a 53 trillion budget, where they had planned to have interest payments of 7 trillion, up from 6 trillion this year running. And then later, it has increased to 58 trillion, but the beneficiary from these increments we see is debt servicing, because we see an 8 trillion in interest payment against the 58 trillion budget, and of course debt service increasing to about 25 trillion. And then we hear there is a 60 trillion budget as we speak right now in Parliament, and the interest payment will definitely be over 8 trillion, and debt servicing, which includes the amortization, interest and etc., increasing to over 30 trillion. So our concern really is about the ability to spend the money that we mobilize in taxes by government on productive sectors of the economy. If government is throwing their nets wide to ensure that they attract investment or they attract funds from the public, that would be good. But what are we spending these monies on? If people come in and invest in bonds, which is a good thing because government is mobilizing funds domestically, but what percentage of these funds are going to be plowed back into the economy in form of development spending? And we see that it is barely above 6 trillion will be spent on servicing the economy, development expenditure, as opposed to debt. So that would be our biggest concern. Thank you very much.
My name is Roma Kennedy. I'm a member of the Tax Justice Alliance. I work for Uganda Parliamentary Network on illicit financial flows and tax justice. I think my colleagues have expressed our position. By principle, taxation must be fair, it must be progressive, it must have a common sense of equity so that the burden to the taxpayer does not burden to the extent that the person feels this is not fair to me. And I think the proposal that we have put here, in one way or the other, some of the proposals that come from the government, we feel undermines the principles of equity, of progressiveness, and that's why we think that the government needs to review, and now the burden now goes to the members of the parliament who have the duty to protect the taxpayer from what is supposed to be burdening. I will only speak out to issues of IFFs, which is the illicit financial flows, which actually undermines greatly the effort made by the tax bodies to collect money for domestic use, for resource allocations. The data that we have recently indicates that Uganda, in about half of the financial year, we lose over 500 billion shillings. So if we lose about, in half a financial year, we lose about over 500 billion shillings. So that is a good money that we think that the government must be able to curb ways that can be able to eliminate the ideas of illicit financial flows. The IFFs, the illicit financial flows, these are monies that come, that circulate in the country, but you cannot be able to track them. You can't hold them, but they're circulating in the economy. And yes, if you had improved systems, this money can be channeled instead of burdening the taxpayer on other things that we see that is coming from the government. The other thing I want to finally say is the proposal to have taxation of non-business described of lands, that we think it undermines the equity in the sense that they have indicated specific areas. They have cities, municipalities, or the urban areas. But Uganda generally is a planning area. Now, if you're going to deal and have a proposal of a tax that only has a component for a specific place, we think that is going to be very discriminative, and that is why we think that the governments will be able to rethink about it. Much as we highly welcome the idea, taxation is not a bad idea, but taxation should not be treated in isolation to the effects that it has on the businesses, on the population, on the service delivery to the people. So that is why we would implore the government to look broadly and have a consideration for the views that for us we say as citizens, that it will be able to help even the government to mitigate issues of loss of revenue.
Thank you.
And just to conclude, like one of my colleagues said, as much as there is an appetite from the government to collect revenue for service delivery, I think the government should begin to put a lot more emphasis on improving the system that can be able to contain misuse of finances or resources collected in each financial year. I think we have a lot of gaps that if we channel the energy, okay, the government channel the energy, that could be able to save the country a lot of money. Instead of overburdening the taxpayer, would have a broader way of taxation that can be able to pull a lot of resources, not necessarily every time increasing taxes or finding where to have a pressing tax on the citizens. Thank you.
Thank you.
Thank you, our distinguished panel. Now I'll give an opportunity to the media to ask questions. As we go to the Uganda version, can we, is there anyone in the media that is interested in asking a question?
You explained everything.
The Uganda team?
Ladu?
Yes. Okay, good morning. Good morning. Just two simple questions. One is, when we speak of productive sector, I've heard this many times, that the money should be put in productive sector. Now, I'm just trying to find out what do we mean when we speak of productive sector. I'd like to assume that, I'm not sure, you'll correct me if I'm wrong, that agriculture could be one of them. But under which value chain in agriculture should that money be put? For instance, should it be in nuts? Should it be, where should it be? Then one last one is, of course, government seems to have proven incapable of widening the tax base. Now what they are doing, they are now deepening it. But we know, and Christine, probably this for you, that part of paying off the debt, part of the deal is that money should come from money that has been collected domestically. That is what should be used to offset the spiraling debt. We also know that government is incapable of widening that base to help it pay off that debt. So what they have to do is to, to deepen from what we already have. Now, what's the future? Because it seems we are stuck. What they are trying to do, you are saying it should be fair, it should be equitable, but they've proven that it just can't happen. So how do we go forward? I'd like your thoughts on that and other panelists. Thank you.
Thank you, Ladu. Any other question?
Recently, the Ministry of Finance proposed that they want to increase the economy by tenfold in the next 15 years to come. Don't you think there will be more taxes to come on the way, since they want to increase the economy by tenfold?
Is that it?
I think first I will respond to the one that Kadu asked about the production sector. Ladu, the one that he asked about the production sectors. Then I'll let my other colleagues to come. One, when it comes to investment in the production sectors, one, we have to look at the budget strategy. And what does the budget strategy say? If the government is desirous that we move from a raw material or agro-based kind of export or production, or like whatever it is that is premised much more of us continuing to base on raw materials or raw form of agriculture products, I think the most prudent one would be that one, investment is done in the agriculture sector. Secondly, the one would be investment in areas like manufacturing, and thirdly, in areas like private sector development. However, the people that may be experts on the budget, they will give us the figures. But if you're looking at the fact that the budget allocations towards these three particular sectors are reducing year in, year out, this affects because one, you're not going to invest little and expect the sectors that you're investing in, like manufacturing, to produce a lot, especially when they're not being facilitated in the way they're supposed to be facilitated. If our manufacturing capacity remains below the average and it is just at 35%, and yet you're looking towards value addition, that means your budget allocation towards that particular sector has to be much more streamlined, so that your investment streamlines exactly what you're supposed to be benefiting in terms of the return on investment. In regards to widening or deepening of the tax base, I think that's where the IFRS system comes in, because in the ordinary sense of the IFRS system, as if you are to benchmark on what the other countries have gone through, it is supposed to widen the scope of how tax is supposed to be administered. So that would mean, in essence, that even the people that were not previously under the tax bracket are supposed to fall within that, because the only way government is going to determine that is if they use a system to track how your economic activity runs. So this means essentially that in order to widen the tax base, because if you look at Uganda's tax regime, you'll find that it sits on only a few people. For example, an employee that earns 30 million Ugandan shillings in a year pays 30% of their taxes. Omusobozi, the business trader that makes a gross turnover of 30 million, which is the same, only pays 80,000 under the presumptive tax regime. So I don't know whether that speaks to the fairness or that speaks to the broadening of the tax base. So we also realizing that the number of people that are not within the tax system, because we have a very large informal sector compared to the formal sector. So this is something that is supposed to help us streamline that. In regards to more taxes is the only sustainable way of financing the budget. All we are asking for is it has to be spread out so that everyone can contribute their fair share of taxation. Thank you.
Thank you. just to speak to Lado's concern on the deepening as opposed to widening the tax base. I see government coming out this time and attempting to widen the tax base, like I'd already alluded, in the exemption of incomes earned from government securities, specifically on the secondary market. Because at the secondary market, that is where we see any citizen being able to play or to come and deal. And how do you do that? That is through your bank. And so by doing this, government is ideally attracting, it is not even forcing you to lend to it. It is basically trying to attract you to buy the bonds and the bills at a much fairer rate or at an attractive rate. So as you invest in these bonds or bills, you're ideally lending to government. And any citizen, like I'd said, even at 100,000 shillings, you can go and invest in government securities, and you're able to earn some interest or some income on your investment. And I see that as widening the tax base if every citizen can come and at least try to invest. The challenge, though, that we have seen with this, and what would demand that government first do, is make sure they popularize this within the citizenry, because there are very few citizens, even here within us, at the within the city or at the central level, there are very few citizens who understand how these markets work or how these security exchanges work. And so for us to be able to reap from this, or as government, to be able to ensure that the citizen is contributing towards the government, resource envelope, we need to take it away from the few who already have this money, because if government reduces the interest, the majority of the people who are going to run to benefit from this are those who already have the money, those who know how these markets are working. And that is unfair. That is not widening the tax base, but rather benefiting a few section of the population who already have the money. And so this would be a good venture if only it were to be popularized and citizens educated. I mean, even within the financial, the banks themselves, they are not aware. Some of the bank staff are not aware how this works. And yet any ordinary citizen, for you to invest, you have to go to your banker, and that is how you're able to access these markets. Thank you very much.
Maybe quickly on widening the tax base, something that we hadn't highlighted is the issue of wealth tax. We know families that have been in this country post-colonialism or pre-colonialism that have maintained and continue to accumulate wealth in this country. And I think that it's high time that government became more and more serious around the issue of wealth tax. And then regarding the issue of, I think also, I mean, when we raise the question around widening the tax base, I think that it's also important, and in order to be able to pay debt, we know, for example, that the Southern Bypass, the express highway, the so-called most expensive road in the world, is also one of those debts that we are paying back. And yet there's a road toll that is being collected. So I think for me, I would want to challenge us to look into the road toll that is being collected and see if it's part of what is paying back that debt, or if we are actually already continuing to collect tax revenue to try and finance that same debt whose money is already being collected. Yeah, thank you.
Thank you so much. I think the English version will end here, so we'll call the people that are going to sit on the panel for Uganda. Gracias.